So what really is trading? Is it trading and putting yourself in a position to only trade high probability setups? If so, why do none of you guys trade based off of statistics, right? You can look, yeah, you can look at the higher time frame, you can look at this high, you can look at this low, you can look at this hourly fair value gap, but at the end of the day, what really matters comes down to statistics. Because when you look at the statistics, what the market has previously done, you can actually get real confidence in your edge rather than to pick a random high and a low and a fair value gap, right? Now, I'm not bashing ICT or smart money concepts. I'm just generally trying to say and help you guys that if you trade with statistics, think about it, the market's always changing, right? So if you're trading statistics that are changing along with the market, then you're not only you have the ability to trade and cherry pick and allow yourself to only trade high probability setups. But enough of that. I'm gonna jump straight into I guess the data system and how I'm trading and how I'm potentially going to bot trade the strategy moving forward. So every day 9:30, 10:30 we form a swing high, swing low. Okay? We use the wicks, so this is the low, this is the high. On any time frame, preferably under an hour, when we confirm above the high, there's a very we track the chances of if it will touch the opposite side, in this case the low. If we confirm above the below the low, then we track the chances that it won't touch the high, which we can see this data here. And by the way, you don't have to trade YM, but let me quickly go over the statistics. So the past three sessions, 2 out of 3 times when we confirm above the high, we didn't touch the low, etc., 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 etc. for bearish and bullish scenarios. But when it confirms above the high, by the way, that means bullish, and when it confirms below the low, that means bearish. So now you can easily see how this can actually give you bias, right? You can actually see statistically, not a random fair value gap, not a regular random high or random low. You can statistically see this data right in front of your eyes, and you can also see if the indicator is tracking right. Like, I mean, I checked that the indicator is tracking data correctly, but you get it. You can see that, like, you can't lie about statistics if that makes sense. You can lie about a fair value gap concept. You can lie about any concept, but you can't certainly cannot lie about data science and statistics. Okay, but yeah, once you understand this, now we're looking at time, right? Time and price. So what is the average high of the day that forms after the DR confirmation? Well, 1401. By the way, after the DR confirmation, which means that it closes above the DR high. So we're only looking at bullish scenarios. So anywhere from when it confirms to the average time. So now we look before, right? And what is the average high of the day? So the average high of the day is zero point 0.4, and then the average low of the day is zero point 0.3. That doesn't guarantee, by the way, this doesn't mean, oh, there's an 80% chance that's a hold. No, it's showing you historically what has been done before when we confirm above the high, just for your information. It does not mean 80% chance. So we're looking at the zero point 0.4 level, right? Okay, mark that out. I actually took this trade, by the way, for those are wondering. By the way, I'm still testing this, so yeah, just stay tuned. But it's been pretty well. This is my journal so far. Um, Nothing too crazy, but and I also didn't cherry pick. I picked random assets from different times. But yeah, I mean, enough of that. That's kind of like my own edge. Just expand. We can see that the average high of the day or the lowest was 0.1, 0.14. So I'm looking at the zero point 0.1 level here. By the way, obviously everyone trades differently, but when I saw the rejection off of this high, which is what I backtested, you please use your own strategy with this for this time window. But when I saw this, I entered right here. Let me go back here. Inside the time window of if when the average high of day will form, right? Because we know that a high probability entry will form if it retraces whatsoever. Also, I also have this indicator in which you can see what percentage from the confirmed high will hold. So, for example, 0.15% below the DR high, the past 3, 5, and 10 sessions have a 0% chance of holding, 20% chance, 60% statistically, sorry, not chance, but it only held 60% of the times, or 6 out of 10 times, this level from the DR high. And we're looking at bullish scenarios, but I didn't really like the probabilities or statistical or historical odds. So I decided to say screw that and look for a entry. But yeah, I entered right here and I wrote this thing for 3R. I knew that if we could get above the 0.1 level and break and respect it, we could keep going higher, which we did. But yeah, and I just held through that. And we ended up forming the high of day at 0.29. You can also see 0.28 was one of the outlier data. So I was looking at 0.12 after we broke actually. And yeah, you get the idea. Pretty much time, price, probabilities, which levels will hold, which won't. And yeah, that's pretty much it. Like moving averages, percentages, how much will price potentially move. You can use all of this to your advantage. Or at least that's how I use it to my advantage, but this is still something I'm playing with, but I've been seeing very good results. I'm still back and forth. I'm not gonna lie, my emotions has fucked me up. But for you guys that have better discipline than I do, I genuinely think you guys can use this to your advantage and form better biases in general. I I really believe that. I seriously do. But aside from that, that's pretty much it. And updates from my end.